All right, guys, back to work tonight, Wednesday evening, August the 4th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trade setups for tomorrow. That's Thursday's trading session. I got a great video in store for you guys tonight. Charts are all prepped up in the background, as you can see. The whole gang is back together tonight. S&P's here, Nasdaq's here, gold is here. Glad to see you are here right along with me. Boy, busy day in the markets today. Had a big pump and dump on the gold. Get a nice spike in channel on the gold. The yellow metal looking great for some trades tomorrow. Nasdaq and the S&P are both range bound. Nasdaq is bullish into a range. The S&P being bearish into a range. I'll tell you, both the S&P and the Nasdaq, it's tough to be a buyer right now on those E-minis. Got a lot of great trades on our radar for the S&P and the Nasdaq. We'll definitely have some buy setups to keep your eyes on for tomorrow. So, boy, plenty of opportunities as we go into one of the last full days of the week at a Summer Friday non-farm payrolls coming up later this week. So tomorrow is definitely going to be a big day for us tomorrow morning in our trade room. Now, a lot to cover here tonight on the video. Before we jump in, as always, make sure you subscribe to our YouTube channel. I publish this video every evening with our best trade ideas for the following day. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you guys have any questions, drop those questions for me in the comments section. I would love to answer any questions that you might have. And as always, if you appreciate the video tonight, if you like the video as much as I enjoy making it, do me a favor, hit that like button, that thumbs up here for us on this YouTube video. So really appreciate you guys carving out some time with me here every evening on this video. But enough of the intro, though. Time is taking a little late to the party here tonight. Thursday is right around the corner. Let's get these charts all prepped up and get our mind right and get our plan right for Thursday's trading session. Got a range on the S&P, right? Got a range on the Nasdaq. Maybe a range here on the gold. We are bearish, of course, into that range on the S&P right now. Got a lot of great options here to sell those pops on the S&P, or possibly selling breakouts going lower here. Again, we don't have an easy road for buyers right now unless they can really show us some strength here, because we got a lot of resistance zones up here overhead. We'll talk about my favorite trades to get short. We'll also talk about some long trades tomorrow, because obviously we have to make sure we have everything on our radar, or everything prepared, right, no matter what we get tomorrow. Nasdaq is more bullish than the S&P, obviously. Nasdaq is bullish into that range. But you can see, though, we're running right into major resistance. I've got weekly pendulum swings, all-time highs overhead. Boy, this is a beautiful potential short coming off the high of this Nasdaq right now. And, of course, you know, anytime we go above the high of a range, we always have potential for those big pendulum swing reversals that may really backfire on these buyers tomorrow, especially with that jobless claims report tomorrow morning on our radar. We're going to cover all the details, of course, tonight on this Nasdaq. And gold, right? Big move up, big move down. I got a great spot up here. Got a channel up top here. Got a little spike in channel, big channel. Would love to short some pops here. Would love to short some breakouts here. And I'll tell you, one thing about gold right now, we definitely know anything is possible on the yellow metal. So I'd be foolish not to at least get ready for some long reversals here tomorrow on the gold as well. Not to worry. By the end of this video tonight, you'll know my favorite trades for tomorrow, whether you're trading on your own or whether you're trading with us tomorrow morning in our trade room. Speaking of tomorrow morning, though, let's make sure we're all on the same page. Tomorrow, of course, is a Thursday. It is pretty much a typical Thursday, but I would say this is a Thursday that a lot of people are looking forward to, because let's kind of go over it. Our big news tomorrow is that jobless claims report at 8:30 Eastern time. Now, I wouldn't normally say it's a big deal, but you probably heard about today, right? We saw that ADP employment report today, which I talked about last night. It's not usually much of a catalyst. Well, when they get half the numbers of jobs they were expecting, that definitely acted as a catalyst today. They were expecting over 600,000 jobs added in July, of course, right? These are employment numbers for last month, and I think they got roughly 300,000 came in. So pretty much half of the jobs they were expecting from the employment report this morning is what they actually got. That really puts the feet to the fire now of the employment situation coming out on Friday. Why does that matter for us tomorrow for that jobless claims? Well, because obviously if we see a big downtick in new jobs and we see a big uptick in jobless claims, right? Meaning any, out of work benefits, right? Ongoing claims and things like that. If we see a big spike in that tomorrow, this could really weigh on a lot of the traders' minds, a lot of the investors' minds, and we may see some pretty volatile reactions to that news tomorrow morning. So, jobless claims definitely going to be our big news tomorrow at 8:30 Eastern time. We do want to make sure we're at our desks early tomorrow morning. We don't want to miss the reaction of that jobless claims. Tomorrow morning, don't forget, 8 o'clock Eastern time. We'll be right there with you guys in the trade room. We're going to prep the charts and get the plan ready for tonight, and then tomorrow we'll trade the stuff in the trade room. We open up every morning, 8 o'clock Eastern time. I'll put all the membership information on a big button for you right below the video on our website. Or, of course, if you're on YouTube right now, check the description of that YouTube video and grab that link, get registered, and I'll see you tomorrow morning at the opening bell. Little bit to keep in mind too, tomorrow afternoon we get that non-farm payroll number on Friday morning. Remember, the last 1/3 of the day on a Thursday before non-farm payrolls is usually a little bit low volatility, low volume. So be careful late in the day tomorrow. We'll talk more about that tomorrow morning, though, in our trade room. So make sure you get registered, and I'll see you there at the opening bell. Back to our charts here right now. S&P, Nasdaq, and gold. Why don't we jump here first into the S&P, the E-mini S&P 500. Don't forget, I'm going to put all the chapters at the bottom of this video. So if you're on YouTube right now, or I believe anywhere you're watching this video, I know most of you guys will watch this from start to finish to make sure you're ready for tomorrow. But I know a lot of you guys, though, use this video tomorrow, right, while you're trading as a reference tool. So don't be afraid to use those chapters at the bottom to kind of pick and choose what market you want to go zoom into here. All right, let's get after it here. What do we know? What's the key takeaways right now here on the S&P? Well, of course, we get a bear market. That bear market turns into a trading range. Anytime we have a range on the chart, we know there is a magnet basically right in the middle of that range. We also know ranges mean rotation, right? Rotation, back and forth. And, knowing that range in the middle is a magnet, our job is to find levels of resistance above the range to get short and levels of support below the range, right, to get long. Now, obviously, we have a bear bias to this right now, so shorts above the highs would definitely be a little bit more reliable, a little more consistent than trying to buy off of this low. And of course, right, we found our trend lines overhead, right? I've got swings overhead, things like that we're watching here as areas of resistance. Now, it's not just this area here, right? You'll notice we have a lot of resistance up top overhead too, right? We've been talking about these major tops. There is no shortage of resistance overhead. That's why I said earlier, it's a difficult job right now to be a buyer. You either have to really buy down around these lows, and we'll talk about how to do that in a moment, because even if we do pop and go through this initial sell zone, even if we do get up around these highs, we're still at the high of this just monster weekly range, right? I mean, you still get this big range down here. So even if we were to go back and retest the high, you still have a hard time wanting to be a buyer on this. And of course, just by looking at this chart right now, if we were to get a little, if a stiff wind was to come through here and push this thing lower, we've really got this is where that big news tomorrow morning could really get things kind of spicy tomorrow, right? Running lower, we get those big range lows down there, 43.70, 43.65 on our radar for the short side. So again, a lot of difficulty to want to be a buyer right now. That's kind of one of the big takeaways here on this chart. So range acts as a magnet. I want to sell high, right up at resistance, and don't be afraid to sell short here as we're breaking down and trying to complete that big swing back in the opposite direction. All right, how do we trade this stuff right now? It's relatively simple. I think the biggest variable on this chart is going to be what happens here in the overnight. For example, if we take out that low and then bounce up, I don't have to worry about any rising support levels, right? Let's see here. If I bounce here right now and go higher right now there creates this rising support. And so whenever you have a rising support level, I just got to watch out for that, right? I don't want to sell into that area. So that's kind of the big variable we have on this chart right now. For example, right, if we take out that low and then bounce back up at that high, I pretty much have my pick of the litter, so to speak, right, at trading failure setups, right, waiting for buyers to come in, try to get long off the moving average and selling back down. I would love to use what we call failure price action setups, and we'll talk more about that tomorrow morning in our trade room. We're looking for those shorts, right? Those failure patterns, right, up off that high. The challenge, of course, is if we don't get that, or if we end up popping higher here now as we go higher here now it's not as easy, right? Now we want to do is try to find those traps, right? Traps are going to be kind of your bread and butter here if we were to go higher without finishing off that rotation, right? Does that make sense? A trap setup. Now, I'm just simply kind of illustrating on this right now. It may be a little bit steeper, right? Like that, right? So it may definitely take on a couple different, forms on that. But again, if we don't complete that rotation, watch that trend line coming over and look for those traps, right? Traps will really be your best bet when you've got those rising support trend lines, right, to going back down to retest those lows. Now, what if we go higher here, right? If we go higher, as we go higher, can I buy it as it's going higher? You can. There's very small window, of course, right in this area here. What you want to look for to be a buyer on this would be a strong move higher, a shallow pullback, a higher high in price, and a trap off of that low. Now, kind of the ideal situation on this would be to get in off of that trend line, right? So we're going up, strong move higher here for the bulls for whatever reason. Shallow pullback, right, drives the buyers crazy because they're trying to buy it. Higher high confirms the move. We mark up that low, and we're looking for that trap right below that low. And again, would really be nice if we combine that off of that trend line or off of that area right there, because that would really be a good level of support. At that point, we have enough momentum for the bulls, right? And of course, we don't want to buy into that high up there. So a very difficult, very small little window for the buyers as we go higher here. But hey, with enough momentum on this thing, and again, that shallow pullback, higher high, that trap would definitely be something to keep on our radar here. What if we end up top here though, right? How do we, and again, this is where being a buyer up here will be difficult unless we can really see a very strong move higher. Can I sell off that high, right? So let's say, for example, we get that run higher. Let's say we grab that long, right? We go up, we take up those highs here, right? Bingo, mission accomplished for the buyers. How do I sell that thing now? How do I sell it? Well, now what's the problem? The problem is momentum. There's a lot of bullish momentum on this move higher, right? We're at a great location to sell short, but with all that momentum, now we got to be careful. We basically want to give the buyers the benefit of the doubt. Let them try once. Let them try twice. And once those buyers now have tried twice, now all their stop losses are sitting right below that low, right? And I can sell that thing right back down again into that range, acting as a magnet. Now, as an added bonus, I also like to look for that new channel coming down, right? So imagine now we get the short off a failure, and then what we're going to do is we're going to drill down to a faster time frame and grab that pullback, right, off the high of that channel, right? So again, we go up, we take out those highs, right? To be honest, we don't even need to take the highs out. We can get halfway up to those highs here. Anywhere in this sell zone would be fine by me. Buyers try once, buyers try twice. There's your failure setup. And then again, we're going to drill down to a much faster time frame. Remember, this is a 6,000 tick chart. We're not going to try the 6,000 tick chart. We'll drill down to a faster time frame, and we'll grab our shorts right off the high of that channel. Now, remember, the two most common price action entry setups we don't use indicators because indicators are too unreliable. They're too lagging. We look for traps and failures, right, off the high of that channel. Those failures oftentimes lead into pullbacks, and this could really rip, right, going back higher here. Now, I go into a lot more detail of how to find the channel, right, how to find the price action entries. I go over a lot more of those small details in our quick start class. A lot of folks ask me, how do we time the entries? How do we find levels of support and resistance? I cover all those smaller details in the quick start class. It's a great little short shortcut class. And not only will you learn the price action entries in that quick start course, you'll also learn how to find the right market conditions to take those trades, right? Because, entry patterns or price action patterns are great, but in order for you to really get the consistency you want, you got to learn how to apply them to the right market conditions, the right levels of support and resistance, and the right conditions. I cover all those very important details in that quick start class. So grab the little link that popped up there and make sure you take that quick start course to really master the same strategy we use in our trade room. We also, of course, want to avoid the middle, right? So stay out of trouble in the middle of that trading range. And then as we go lower, right? Now, how could I buy this? Could I buy this market? I absolutely can. I've got that low. That's going to be the first thing. I'm going to want to see that big move down, obviously. I want to see him take out that low. And then it's just like up here. We wanted the buyers trying twice and back down. It's the same basic idea. We're at a great area to buy because we're at a support level below the trading range. The problem is what? We're just too bearish, right, to get really aggressive on that entry. So what do? You give the bears the benefit of the doubt. Let them try once, let them try twice. And again, those stops are just easy targets now, and we can buy into those stop losses, right? Again, we call these failure setups. This is what we call a two-try variation of that failure, because obviously they're trying, right? They're trying twice. And again, we're going to drill down to faster time frames to take these trades tomorrow in the trade room. And so I'll cover all those smaller details in that quick start class up top here. How do we sell this thing as it's going lower? Right? What's the best way to short this thing as it goes lower here? There are two basic patterns you can look for as this market runs lower. One would be, let's say we get a pop lower here, not incredibly strong, and then we pull back to the moving average. If I get a strong jump off the moving average, right? This is called a 1, 2, 3 breakout pattern. Okay, these 1, 2, 3 moves are a key component to my trading strategy. Once I see this 1, 2, 3 breakout, I now know this range overhead isn't as strong of a magnet anymore, and now we assume the market's hunting for something new. At that point, I want to stay patient. I want to find my entry off the high of a new channel. Mark off that low, right, new trend line, mark off that high, find that new channel, and then again, as I mentioned earlier, we're going to drill down and find our entries. They're usually just above the moving average, right? Love to look for those failure into pullback, into strength moves. I'll go over more of that stuff, right, in that quick start class, right, I talked about earlier. That would be a great entry, right, off of the high of that. And you'll notice I'm not trying to sell that first one. Right? I'm not going to sell that first one. I would sell the first one if we saw something like this, where a really strong, real strong breakdown, shallow pullback, lower low. I would gladly sell that, right? That's one of my favorite patterns, right? Is that we call that's called a two-try trap. And then don't forget, you can always kind of add bonus points, as I always say, by lining up those lows, by lining up that high and combining it off the top of a channel. If you can combine a trap off the top of that channel on the way lower, my goodness, it's almost a bulletproof trade, almost a guaranteed winner on a market on a move like that. Because again, you've got that big range bottom down here, right, that we're looking for here. So those are a couple key patterns, right, as we go lower. We may also see a spike in channel. You'll see a spike in channel on gold. It may spike down, right, and channel out. If it does that, to look for the pullback, right, in the base of that channel, right, that trap above the base of that channel. So we'll keep an eye out for a spike in channel. I'm sure there's going to be something tomorrow that I didn't anticipate, right? The markets are always keeping us on our toes. So we'll make sure we fill in any blanks tomorrow morning, any gaps tomorrow morning in our trade room. But now at least you got a pretty good plan and pretty good idea of how to trade this stuff, how to stay out of trouble, and of course, how to make some profit if you're trading on your own tomorrow without us in the trade room. Let's keep going. How about some Nasdaq here right now? Over to the Nasdaq. Nasdaq is very similar to the S&P, but you'll notice there's quite a big difference. The biggest obvious difference is we're bullish into a trading range, and we are, of course, above that range, really sitting at monthly highs right now. The buyers have a hard time here. This is not an easy place to be a buyer right now. We are at major levels of resistance above a range that acts as a magnet. We've got the monthly high overhead. I've got trend line, or we'll call expanding triangle high here. One of my favorite ways to trade triangles is to use these or trade ranges is to use these expanding triangles. And I mean, come on, it's just begging to be sold here right now. Now, in the buyer's defense, we do have a lot of strength on that move higher. So it would be a good idea to wait for the buyers to try a couple times, right? And then grab that short right from there. As you can see, I've kind of made an outline on that already. So that would be kind of my goal here for tomorrow, getting short on this. As far as the buy side goes, man, oh man, you get the all-time highs just overhead. You've also got the weekly pendulum swing up there. So, I mean, really at this point, unless you're long off the lows or you're long on that breakout pullback, it's the danger zone up here, right? Trying to be a buyer. So got to be careful on that. What else is important here on this? I love how the pendulum swing takes us all the way back to yoo-hoo, right? There's your weekend gap. That, of course, is the closing price from last Friday. Wouldn't it be fitting if we finish up there tomorrow, sitting right on last Friday's close? And of course, as I mentioned in the introduction, whenever we have a market that runs up, big time, right? It's a big move up. Anytime we see the market push that far outside of a range and then come screaming back down, yeah, I mean, the pendulum swing target's down here, but there's now so much momentum that we'll oftentimes see a pullback hold and just blast, right? And so we oftentimes see these complete breakouts on the other side of that trading range, right? And of course, the bears have a huge, big target down there. What is that? 14,870, something like that, right? That area there, which was kind of the low of yesterday morning. So we've got that all set up for tomorrow, right? Or all set up here for tonight. So how do we buy it? How do we sell it? The sell side, again, is the easier side right now. We've already got this big, strong push higher. We're at major areas of resistance. This is exactly what the bears would love to get on the S&P tomorrow. The buyers have obviously tried once already. Once they try twice here right now, boy, I would love to mark up that low, mark up that kind of hidden channel high. If we really get lucky, we'll get a trap right above that high. And do you see how this all comes together? Look at this trend line coming off that low, right? I mean, is that just a sweet spot to short right there, or what? That would be, of course, the buyers once, the buyers twice. Everything lines up. It's like the perfect storm, right, for that short there. That would be kind of the dream come true entry, right, with that trap high off there. So get the buyers trying once. If we can go lower here and get them trying twice. Now, one thing you want to be aware of on this, a little variation. This will also apply, by the way, to the S&P. We've got them trying once. Let's say, for example, they really tank, right, and go lower here. It's not going to be as reliable to sell off a channel when that channel's really steep like that, right? It's still the same pattern, but there's a very big difference between selling down here, right, and selling up here, right? Very big difference, right? So if we get a relatively, shallow channel here and I can sell off that, that's a great trade, right? I'm selling way up at resistance overhead. Just be aware though, right? And again, this will also apply to the S&P. If we really drop like this, it's just not as reliable of an entry down here. So I'll tell you the same thing I tell my clients. If this channel becomes really steep on the way lower, what you want to do is you want to make sure you keep your eyes open for a trap, right? Traps are usually going to be, again, they're always kind of the easiest way to avoid the headache of selling too low. It's the same basic idea, right? You're selling off the high of that channel. You get the buyers trying once, the buyers trying twice. You know what I mean? Same basic idea, except that trap pattern is where everybody's waiting. All the professionals are waiting for that trap as we go lower. So a couple different options there to think about on that Nasdaq short going lower here. And then, of course, right, like I mentioned before, if we can get that, get those buyers once, buyers twice, whatever the variation of it happens to be, we get that big push lower. If this move lower really starts to take off on strength, now the gig is up. Now there's a big bullseye right at that pendulum. You can mark up that low, mark up that high, drill down to a faster time frame, right, and grab that short off the high. Now, a lot of folks will ask me, what about the middle of the range? Is the range a concern there? In this situation, it's not. Back here, absolutely, right? It's all chopped up and all messy. But when you've got the buyers roped in and they're failing, right? And the thing rolls over, everybody's going to want to get in on that first pullback because it's going to usually steamroll back in the opposite direction. And again, keep in mind, I'm just simply kind of drawing up the basics right now. Traps are great off the high of that. Buyer failures are great off the high of that. Pullback combinations, and again, if that doesn't mean anything to you, if that terminology is new to you, that's exactly why I have my quick start class, right? My quick start class will bring you right up to speed with how to set your charts up, the indicators I'm using, everything you'll need to kind of get all prepped up and ready to go. So the next time I say 1, 2, 3 reversal into first channel pullback, you'll know exactly what I'm talking about. All right, we're looking good on that. So that's some things to think about as we go lower. As we go higher here, how do I buy up here? It's very difficult, right? So one way to do it would be we got to go up. We got to hold the pullback, right? Got to hold the pullback and got to blast, right? I mean, literally, this has to just go, all right? And this will probably be on the back of some Fed speech, some news tomorrow. It almost seems like we have to get some catalyst to really punch this thing, to make the buyers think there's more value up there, right? So we've got to get the 1, 2, go, right? And I'm telling you right now, the strength of this first leg will be irrelevant. The strength of that first leg is completely irrelevant. What you got to watch for is the strength of the second leg. That second leg should be blistering. It should be very, 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 very strong as it jumps off that moving average. Then we can mark up that high, we can mark up that low, and we can grab that first pullback, right? I definitely don't want to buy the first pullback, but I would gladly buy, right, that second pullback with one of the price action setups that I talk about in that free quick start class, right, linked up in the upper right-hand corner. Another possibility, because you can see there's a ton of open space up here, it's all-time highs. Another possibility here would be, let's say, for example, this thing pops up, right, we get that strong jump going higher, and that jump going higher now turns into one of those 2-try traps like we saw in gold today, right? Gold, that big run up, right? We saw that beautiful 2-try trap right on the gold. We'll take a look at that here in a second, right? So if it really just launches, right, and runs, shallow pullback, higher high in price, that trap is pretty darn reliable, really, no matter where you are, if you have enough momentum, right, going higher here. Would it be possible for us to go up, take out that all-time high, and then apply that same 1, 2 short into, right? Would that be possible? Absolutely, right? Absolutely, that'd be possible, right? You get the push up, take the highs out, buyers once, buyers twice, all the stops are sitting right below that low, big fat juicy candle to sell into it, absolutely, off that high, and then of course you're marking up that low, marking up that high, right, and you're shorting that sucker as it pulls back, right, and rotates going lower, right? Easy pickings as you go off of that high. That's definitely something we're going to keep on our radar here for tomorrow. Now again, if we were to just dump, right? If the market was to just roll over, if it was to roll over, absolutely traps are on my radar, right? If it rolls over, traps are always going to be on our radar, especially if it just collapses here, right? And starts to move lower. That pendulum swing, we'll want to take that out on the other end. Once we get down to these areas, right? If we get down to those lows here, can I buy it down here? Absolutely, I can. How would I buy it at the low of that range? What will probably happen is, if we find ourselves back at these lows, that's going to be a hell of a lot of momentum, right? It'll be a lot of bear momentum. The most reliable way to trade that low now will be to wait for it to bounce, retest, and then wait for that classic 1, 2, and then back up again. Right? It's either that or you really have to be patient. For example, if we take out that low on a lot of strength, remember, anytime we see a ton of strength in one direction, it's almost a guarantee we see a retest of that low. And so I'll tell you the same thing I tell my clients: the stronger the move, the larger the 1, the 2, right, needs to be, right? So for example, if it simply just runs lower, I'm not looking for a little 1, 2, and then buy it back up. That is trade suicide. I mean, it might be bottom. It might be bottom. Anything's possible, right? But the more reliable entry here is to, well, like I mentioned earlier, right, you're going to see that a leg lower here. If we see enough strength going lower here, there will usually be a failure setup just above, right, that high, right, above that moving average as the buyers sort of pick that bottom. And again, I've been looking for those hidden channels, right, to combine with a failure. So that's another way to sell short too, right? Obviously there's a lot of ways you could trade this thing for tomorrow. If it really collapses back down, remember, anytime you see enough strength like that, you're almost always going to get those buyers that just don't know any better, right? They can try to buy that low. Once those buyers buy that low, just wait for them to fail off the moving average and sell into that stop. These failure patterns, these failure setups are really, really common. You'll learn tons of examples of those, right, in our quick start class. So, again, let those buyers, right, let them rope themselves in, take out that low again, and then you're good to go, right? Now the bears got what they wanted. Now they could be a whole lot more aggressive. 1, 2, and then again, we're buying into stops, right, for that rotation back higher again. Literally rinse and repeat. Same thing over and over again, right, as we keep going. Does that make sense, guys? Right? Does that make sense? Let me know in the comments section if that kind of reversal makes sense here, or if you want me to go over it in more detail next time, right? Don't fight the direction. Again, if it really pushes, the stronger the move, the bigger the to try needs to be, right? You're not going to, again, V bottoms are going to happen every once in a while, but not going to happen often enough to make a career out of it. That's how you want to buy right off of that low. And then we'll see them break out. We'll see if they take this thing out and they keep on going, right? If we see this, for example, if it takes that low out and keeps on, right, keeps on going, right? Check out that spike in channel. Wait for that pull back, right? Get that trap, that fail. You know what I mean? If it really starts to roll lower here and starts to grind lower like that, again, all of that momentum, trap setups, failure setups, and we'll keep the party going tomorrow to the downside for the bears. We'll know more tomorrow once we know more about what's going on, but at least now you know how to buy it, you know how to sell it. And let's wrap this video up here tonight on the gold, the yellow metal here. Boy, oh boy, I was bullish last night on the gold. We talked about that buy side on the gold last night. I have to admit, I wasn't expecting to go that bullish on us here today, but definitely, and there was some news that came out this morning. Fed speakers definitely got their hooks in this market here today. But I'll tell you right now, we saw yesterday on the gold, we saw a great example of what can happen when you get range rotation and you don't get that completion, right? That trend line's in the way. We talked about this, right, last night on the newsletter, right? This is exactly the potential. Maybe not as easy for the bulls on the S&P, right? We talk about the S&P, right? If they don't get that rotation, that trend line's in their way. That's possible in the S&P. It doesn't seem as likely that than the gold was today. But hey, again, that's kind of similar. We talked about today on the E-mini. All right. Long story short, what's the most important takeaway right now on the gold? I think the most important takeaway right now is a very strong move down, right? It is a very strong move down. Now, you could say, well, but come on, it's a very strong move up. It was a very strong move up, right? But the strong move down was bigger. It was bigger. I'm kidding with you. What I always tell my clients is, if you see a strong move, we should see a retest. Right? Again, we had the Fed speaker come out today at 10 o'clock and kind of throw a grenade in the gold market today. But, when you come right back and take out that low again, it's like, well, okay, how much can we really emphasize those buyers now? The bears were like, oh, really? You want to go 100 points higher? I'll go 110. I'll go 110 lower, right? How's that sound? So the bears definitely have the edge right now. And anytime we see a strong move in one direction, you can almost guarantee, right, we're going to get a pullback and a retest, right, of that low. Very, very high percentage that we retest that low. Now, we may not keep going, right? We may not keep going much further than that, but we definitely know there's going to be a lot of bears up at resistance levels here overhead. And if gold wants to do what it did yesterday, if it wants to rip higher, then there's plenty of open space overhead, and we can wait for a reversal there on that as well. I think there's two more big components here. One component is the range on this. You guys are experts on ranges now, right? When I have a range on the chart, I find my resistance zone overhead, which, by the way, these rectangles above and below, this technique, I teach that technique, right, in the Quick Start class of how to find the ranges and, more importantly, right, how to find those buy and sell zones just outside of it. So you're going to learn more of those techniques in the Quick Start class. So we got levels of resistance up overhead, right? I've marked up the amount we went below it. We call that the pendulum swing, the amount above it. So you got this great area of resistance up here. I think possibly the best clue is the spike in channel, because you can see how it rolls down and starts to kind of roll lower here, right? If you draw a channel off of that, look where that channel lines up with the spike. Right there, right? So that's your spike and channel sell zone. Now that should bring some deja vu from last night's video, right? Last night we talked about the buy zone on the S&P, right? And that was pretty much exactly what held this market together here today. So we do expect, right? We do expect there'd be a lot of bears waiting up around that spike and channel. Again, the base of that channel. So long story short, we've got the, again, strong move down tells me to be a seller. Range says sell at resistance. Spike and channel says sell up at resistance. And we're looking good here for tomorrow. I think the only variable right now is what happens before we get the pullback, right? You know, for example, right? Let's say, for example, we just simply run higher here. If the market runs higher here right now, what's going to happen is we have a trend line coming up. It's also going to be relatively strong momentum. Now, I say relatively because all of those bears are definitely going to come in. The goal will be on this one to get underneath that trend line and use that trend line either as a resistance level, or at least getting underneath it so we can then use a failure setup to sell off of it, right? So we call these two-legged pullbacks, right, or two LPs, right? Two-legged pullbacks or two LPs, right, because of one two-leg, or, right, two-legged pullback or a failure. So whichever one comes first, we can definitely take that, right, off of that high. You know, for example, right, sometimes what happens is the market will go up, it'll pull back, it'll try to get it, you know what I mean? It'll try to get that trend line, but it can't. All the stops are sitting right below that low, and you can still short that thing, right, on a failure. On a failure setup. That's why I said earlier, right, you could, ideal would be a two-legged pullback, but sometimes we just simply don't get, right, that two-legged pullback here. So either a two-legged pullback or a roping in the buyers and hitting that with a failure here would be worth it as well. Another possibility would be, let's say we make a move lower, right, and then we come up. Yeah, there. See, this is the dreaded. This is what we don't want to get tomorrow. We don't want to get that rising support trend line. If we get that rising support trend line, that's where things become more difficult, right? Let me talk about earlier on the S&P. If it goes lower and comes up here now I'm going to draw that trend line coming in. Now we talked about this, right? This is not an untradeable situation. What you want to look for though is traps. Right? Wait for traps. Traps are going to be your best friend whenever you're worried about buying into support, right? So the trap pattern will definitely be in play there. We saw a lot of that today on the S&P, right? The S&P had that range and that just obnoxious rising support trend line right after that big drop down. And so it's nothing more than simply selling traps up above, right, that trend line. That's going to be how to sell it if we get that, again, that kind of, you know, almost flat, right, trend line there. So we definitely do want to be aware of that. Another possibility would be, let's say, for example, because there's a little trap right there too. Let's say, for example, they sell this thing off that low and then we bounce up. Perfect, right? Now it's easy, right? Now it's a buyer failure, right, into potentially a pullback combination, right, as we go lower here, right? So, you know, again, if we were to take out that low, then bounce, now there's no trend line to worry about. There's also no two-legged pullback here either. Again, with all that momentum, with that sell zone up overhead, it's a range. And so anytime we have a range here, we focus on failures. Wait for buyers to buy off the pullback. The stops are sitting right below that low. If it really shoots lower on strength, right, like the Nasdaq, we talked about, right? On the Nasdaq, same thing. Mark up that low, mark up that high, and trade the rotation, right? Trade that rotation. Failure, right, into that first pullback, right, off the high of that channel. And again, right, we're not going to simply blindly sell the top of that channel. This is a 1500 tick chart, right? We're going to drill down to a much faster time frame And we'll find our traps, our failures, our pullbacks off the high of that channel. Again, I cover a lot more of these smaller details in that quick start class if you haven't joined that thing already. That will be how you'd sell it again, right, as we either bounce off that low, right, or simply, mosey our way up off that low. What if this market was to really pop, right? What if it was a really pop here? It shouldn't surprise us. I mean, come on, look at this chart, right? This chart is all hopped up on something right now, right? So we definitely have the potential. What if it really jumps? Okay, what are some options up here? If it really jumps, can I sell this thing? Absolutely, I can. You remember, the market's not really bullish until they hold that pullback, right? So if this thing really pops off this low, let's say it gets above that channel, right? Pops up above the channel. Now what do? Well, again, a lot of momentum. Anytime we see a strong move, we have to respect the direction of that move. So we wait for one, we wait for two. You got it, right? Same idea we talked about the Nasdaq, right? Nasdaq, same thing, right? Mark up that low, mark up that high. We get the trap, right? Stops are right here, and we're shorting it back down. Find that new channel, right, and hit them. Right? Failure, two-try failure again because of the momentum and that first pullback, right? And at that point, boy, things get really interesting because now that pendulum swing is down here, right? And now you got a big target waiting on their side here, right? So very, very effective there to sell that pop. Or how would I buy it, right? How would you buy it? I'd want to get up into this area, right? Get up into the sell zone. I want to see buyers prove to me that you want this. Prove to me that you want to go back higher again. Because if you can't, I'm going to short it right back down again. Wait for that pullback and blast. Remember, it has nothing to do with the first leg. The first leg is irrelevant. It's all about that second leg. If the second leg can really jump off that moving average, that's when you know something happened, right? The range is no longer in play anymore. The trend has changed, right? I can't trust the first pullback. We're too bearish right now. I'm going to mark up that high. I'm going to mark up that low. Don't worry about that line right there. The line is irrelevant, right, to this stuff. Mark up that high, mark up that low, grab that faster time frame, right? Drill down, find that bear trap, right? Find that failure, right? Maybe we get lucky into something like this where it rips higher, goes higher like that, right? You mark up that high, you mark up that low, you mark up that prior swing, right? Trap, failure, pullback, strength move, right? All of that coming right below the moving average there. Again, we're going to go over all those pattern setups, right, in that quick start class. That's a great opportunity there for the bulls, and you know where they want to go. They want to go back up to grab those 35.5 highs up there. Let's say we get one of these, right? Let's say we get one of these here. Actually, let's say we get one of these because that's exactly what happened today, right? Let's say we pop, right? But instead of pulling back and going, we pop, right? We pop and we keep grinding. Grind, right, like this right here, right? When that happens, we call these runaway markets. Once you see a runaway market, your job is to find a trap like that and get in. I don't really care where I am, to be honest with you. If we have enough momentum like that, strong move up, shallow pullback, higher high in price, that trap is where everybody's going to party, right? So that's where you want to be waiting for. So think about that over here. Again, the personality of this, though, the personality is the key. It's going to pop, and oftentimes it'll grind. Sometimes it runs. I always tell my clients, don't let the term runaway market make it sound like it has to be red hot fast. Runaway markets, oftentimes in summertime markets too, like the month of August, oftentimes runaway markets are not very fast. They just keep grinding, right? And they're a pain in the butt because they won't pull back. You don't get many opportunities to get in on it, right? So you got to wait for that trap and get in. I have some more advanced tactics for runaway markets. We'll cover those tomorrow morning with the members in the trade room. But that's something to keep an eye out tomorrow if this market was to pop and grind, right? Pop and grind, right? So we'll give you guys a heads up on that tomorrow if we set stuff to the trade room tomorrow morning. As we go lower here, do not be afraid of a 1, 2, 3 breakdown. Right? 1, 2, 3 breakdown, mark that low, mark that high, drill down to a faster time frame, right? Short that pop. It could be more aggressive. It could really tank, right? It could really tank going lower. Strong move down, right? Angry move down, aggressive move down, right? Runs lower, shallow pullback, lower low. When you get that shallow pullback like this one back here, right? Shallow pullback, everybody wants that trap. right? I would just make sure you're in on this entry, that trap entry, before you get down into this area down here. Right, because you can see it's going to be a bunch of support levels down there. So make sure the entries are there. This may also run and go into a range down here. So if this thing happens to collapse overnight into a range, what do? You find levels of resistance. You combine those levels with what? With failure patterns. All right, glad to see you guys are paying attention out there. So keep your eyes open for that. And now you know what I'm looking for tomorrow in our trade room, right? But I want to see you there with me. Hopefully you'll come out and join me every morning as a member, and we can do this stuff together. Once again, I'll put all of the membership information you guys need. I'll put a big button for you right below me tonight on the website. I'll also put a link in the description of this YouTube video. Don't be afraid to call the office. I'm always here. If they let me out of my cage, it just forwards to my cell phone. So I'm kidding with you, obviously. But all kidding aside, though, I'd love to talk. I would love to help get the ball rolling. The right brokers, the right data, the right everything. So don't be afraid to call the office. Great opportunities in the futures markets right now. I'd love to make sure you get every advantage as you can. I got live chat on the left. I got chat on the right, and you can always post questions in the comments section below. Guys, thanks for being here tonight. Thanks for watching all the way to the end. Now get out of here. Get some rest. Enjoy some time with family and friends tonight. Enjoy hopefully the nice weather at least in the northern hemisphere, right, of this planet of ours. And come back and see us tomorrow. Again, if I don't see you tomorrow morning at the opening bell, we'll see you tomorrow night. We'll do it all again tomorrow evening on the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.